Hello guys, good day and welcome to my YouTube channel. My name is Posa, and if today is your first time of watching my video, kindly subscribe to my YouTube channel and don't also forget to turn up your notification in order to be notified when my next video drops. Alright, today without wasting much of your time, I'll be revealing another strategy that works for both boom and crash. Don't forget, this strategy only works for boom and crash. For those that have been following my video, I know it has been working perfectly well for you. Always note this, no strategy is 100%. In as much as a strategy, there are always downfalls. You don't expect it to happen every time. These are the mistake most young traders are having. They always want the strategy to be 100%. Don't allow anybody to deceive you. No strategy is 100%. There's always a win and a loss. But what makes the strategy more sweet and okay is when your profit, your win are above your loss. For example, when you are winning 80% or 75% or even 70% and you are losing like 20% of your trade, that win surpass your loss. This is a good win for any trader. Alright, without wasting much of your time, I will be showing you a strategy that works. This strategy has been tested. Don't forget, for clarification, you can always check the description button, the description page, sorry. So you get, you can call me or you WhatsApp me through my number so you can get clarification or proper mentorship. One thing you should understand about boom and crash is understanding the trend of the market. And if you are very good at price action, boom and crash will be very easy for you. Once you understand price action, boom and crash is very easy. Now, don't forget, I trade on spike. This strategy is to catch spikes on both boom and crash. Don't forget, this strategy is to catch spikes on boom and crash. Now, like I said earlier, you should always know how to check the trend of the market. Now, let me just show you a quick way to check the trend of the market. We have many ways to check, but a quicker way to check the trend of the market is using the time frame. The time frame. This is very important because once you know the trend of the market, it's easy for you to know what you are doing in the market. In other words, you trading for spikes. For example, don't forget, for the novice in trading, when you are trading for spikes in crash, you trade on spike, on crash 500 or crash 1000 on downtrend. Take note of this. Once you understand these things, it's very easy for you to trade on the forex market, on the synthetic index market rather. Now, on boom market, you trade uptrend. Don't forget this. Trading on spike, on boom 500 and boom 1000 is on uptrend. Now, how do you check this trend? Now, use higher time frame. Now, you can start from H4. This gives you a picture of what has been going on in the market for the past hours. This gives you the trend. It gives you a proper trend of how the market is going. As you can see here, this is boom. This is boom. Okay, I was using boom 1000, so I should switch it back. Now this is boom 1000. As you can see here, this is the average 48 line. Now you can see is a downtrend on boom 1000. Don't forget, like I said earlier, you trade for spike on boom, on uptrend. That is to say, if it's something like this, it's not advisable to start trading. Rather, you just trade for the little retracement, the small booms that will be coming out. Now, this is not, as you can see here, is a downtrend. It's not really a good it's not really a good way to trade on spike on boom markets. Now, as you can see, previous market here, you can see markets that are booming up here. Now it's above the average 48 line, as you can see here. Now this is a perfect picture. Now, as you can see, once it gets to the support line, as you can see here, this line here, okay, let me bring out an arrow to give you a proper illustration. Hold on. Now, as you can see, it has got it to the support line. Now, once it gets to the support line, there is always a massive pullback. Now, there are ways you get to know this support line. Once you understand this, it's very easy to know when to aim for spikes, even if it's on downtrend. Even if it's on downtrend, as you can see here, also, you can see a massive pullback, but it did not cross the average 48 line, which is the yellow line. Now, this is another one. So the next thing to do is to switch it to another time frame, which is the H1 time frame. Now, as you can still see from here, the H1 time frame is still on a downtrend. But don't forget, like I said earlier, once it gets to the support level, there's always a massive pullback to the resistance level. Now, as you can see here, hold on. As you can see here, as it gets to the support level, sorry, let me take this. Okay, as it goes to the support line here, you can see a massive return. You can see a massive pullback, but now it's still coming down, which has confirmed the trend from H4. Now, if you are trading on spike on this market, it's advisable you use a very low time frame to just see a clearer picture of what is going on in the market. You understand? You can still switch it to M15 to still get the picture. Now, M15 is telling you it crossed the average 48 line and it's still coming back. Now it's forming a higher high, higher low. Now you can see a higher high, higher low, higher high, higher low, higher high. You can see another higher low. Now, this is not a perfect trend to trade for spikes. Now, when do you trade for spikes? Now, you can trade for spikes when using a lower time frame and when you have confirmed the trend. Don't forget what I explained earlier. You should understand the trend of the market before you trade for spikes. Now, this is crash 500. Let's go to a higher time frame. As you can see here, this H4 is on uptrend. It's on uptrend. Now, this, except it gets to its resistance line before it starts pulling back. Now it's on uptrend. Now, when you aim for spikes here, you don't really get to waste much time when aiming for these spikes. Once you've got a spike, you can easily close, but you can still check it, a review from H1. As you can see, it's an uptrend. It's an uptrend. But if it's on downtrend, on crash market, it's very easy for you to aim for these spikes. Now, how do you aim for this spike with this strategy? It's very easy. Like I said earlier, if you have knowledge on price action, it's very easy for you to trade on the boom and crash market. Now, how do you aim for these spikes? It's very easy. You use a low time frame to aim for these spikes. Now, if you see something like this, sorry, let me bring out an arrow to illustrate for you. If you see something like this, you see the RSI line, the standard deviation line is above the 80 line on M5. This is a signal for you to place a trade. Once it's above this dotted 80 line, is a perfect time for you to place a trade. Now, this is one. Now, you have to switch it back to H1 to M1. Sorry, you have to switch it back to M1. Now, as you can see here, sorry, I want to show you a clearer picture. As you can see here, it's very clear here. Now, if you see a trade like this, and you see a break down like this, a first break is a perfect, because this first one now, it's crashed up to this point, while by the next one up to this point before this other one. Now, if you were online and you just saw a small spike here, you can easily enter the trade. This will give you what I call sniper entry. That is to say, it will just come once, but if you wait after two confirmed candles on M1 and it doesn't spike down, then you can easily close your trade. This strategy works. This strategy works well. It has been tested. It has been tested and it works perfectly well. Now, like I said, if it's touching this dotted line here, as you can see here, this dotted one, this dotted 80 line, the blue line here is touching it. As you can see, the blue line here is touching it. Now, this is a perfect time for you to aim for the spikes. Just aim for the spike with another confirmation here using your Bollinger Band. You just aim for the spike and you will see it coming. Now, once the buy candle is touching the Bollinger Band, is another way you can easily get these spikes. Now, as you can see here, once it's touching here, it's very easy for you to get the spikes. As you can see, it's very easy. Now, how do you make these settings? I will show you this way to set your chart. It's very easy. Now, the way to set this chart is to go to your setting by clicking on this F plus. Now you click on the Bollinger Bands. Now these are the settings. Take note of these settings. Don't forget, you can pause this video to understand these settings and what I've explained so far. One thing about trading boom and crash, you just have to be patient, because most times, like I said earlier, no strategy is 100%. But once you get a strategy, just practice the strategy. You can test it on your demo account to understand it well before you start using it on your real account. Now, this is the settings. Once you are done with these settings, once you're done here, don't forget period 30, deviation 1.5, shift 0, apply close. Once you are done here, you click on done. Don't forget, this is the Bollinger Band that I just added. So these are the Bollinger Band. This is the upper Bollinger Band, middle, and the lower Bollinger Band. Now, this gives you a proper way to check the extent to which market has gone. Now, for people using small accounts, It's very easy for you to for people using small account, it's um advisable for you to use lower time frames so you get a clearer picture of what is going on in the market. Now, the next settings will be the moving average 48. This line is very important because it shows you it's another way of checking the trend of the market. Like I said, boom, to trade on boom, it will be the lines, the candles will be forming above the average 48 line. Now, this is the average 48 line setting. Then, if you are aiming for crash, it will be below the average 48 line. Now, once you are done with that settings, you click on done. Now, the next will be relative strength index. These are the settings. Don't forget the levels. Once you are done with the level here, you click on back here, then you click done. Now it comes out for you clearly. Now, this is what we just added in this our new this is the RSI, this is the RSI line. Now the next to add would be our standard deviation. Very important. Once you open it like this, you just click on done. Now this is very important. Now we are done with all the settings. We are done with all the settings. Now, like I said earlier, once you are aiming for the spikes, you're aiming for spike and it gets to above this dotted 80 line here, it's a go signal for you to aim for the crashes. Now, the opposite applies for boom markets. The opposite applies for boom markets. Now, once you see, as you can see down here, once you see the line trading below this average, this dotted 20 line, is a good signal for you to aim for the booms. As you can see, this is a massive turnout. Now it's forming a higher low here. There's a massive turnout for you to aim for the booms in the market. Now this is very important that you note them. It's very important that you note this strategy. Now, once you can get this clearly, it will be very easy for you to trade on this market. Don't forget, you can always reach me through my WhatsApp line. You can contact me through my WhatsApp. Check the description so you can for more clarification and mentorship. Alright guys, that will be all for now. See you guys in my next video. Don't forget to subscribe. Thank you very much.